Welcome back to another Trade Journal video. This is Trade Journal number 31. And before we jump into this week's video, don't forget to like and subscribe so you can stay up to date on all of my trades. Now jumping into this week's trades, one of the first trades I had was on Pltr or Pltr. What I had set up here is a synthetic covered call. And what that is when you buy a deep in the money call with a long expiration. So for example, in my case, I have a deep in the money long call with a 700-day expiration, and then you sell weekly calls against it or calls with just a shorter time frame on the short side. So you're collecting premium when you sell those calls. So in my example, I own a deep in the money call with 700 plus days, and I sold a short call at this blue line, so at the 32 strike price, and I ended up making $83 for selling this call. And as you can see, price really sold off this week. This was seen across the entire market, real strong impact from bond yields and a big kind of red week across the market. But was still able to make $83 off of this short call, and my long call is negative or has an unrealized loss right now, but because it has so much time on it, I'll keep selling calls and then hopefully this will recover. The other position that I took this week was on Aapl. Again, this was a synthetic covered call position. So I have a deep in the money long call, and then I sold a weekly short call at the 133 level, or right where this red line is. And I sold this last Friday when price was right here. As you can see, price tanked and finished below this line, so I do get to keep the max profit on this, which was $80. My next trade for this week was on Tqqq. I took this last Friday right here. I sold a cash secured put at the 103.75 level, so right where this red line is. And the way this works is if the price stayed above this, I get to keep the premium for selling that, which in this case was $290. And if price goes below and finishes below and I don't roll the position or close it out, then what happens is I end up getting assigned 100 shares at the strike price that I was selling at. So what's going to happen here is I get to keep the $290 from taking this trade, which is great for this week, but I will get assigned 100 shares at $103.75 per share. So I will have a pretty sizable unrealized loss in my account. However, my game plan here is to continue to sell calls against this position, hopefully bringing down the amount of loss I have against it until the price recovers, at which point I can get out of the trade. I don't have any trades set up for next week right now on Tqqq, Pltr, or Aapl. I actually want to wait until Monday to see how the market reacts, see if there is a pullback up to the upside, and then I'll sell my weekly calls for a higher amount of premium. So all in all, I'm not too worried about the overall market dip. It seems pretty normal. You know, markets tend to have corrections every now and then. And because I have a lot of time on my options, and because Tqqq is going to be actual shares of the stock, I'm going to keep selling calls against them on a weekly basis until all of the prices recover, at which point I can decide if I want to get out of the position or, again, continue to sell calls against it. So this week's total profit was $83 on Pltr, $80 on Aapl, and then $290 on Tqqq for a total profit of $453. And right now, set up for next week, I don't have anything set up, but hopefully that'll change on Monday. As always, feel free to leave any comments or questions down below. And don't forget to like and subscribe so you can stay up to date on all of my trades. And I'll see you all next week.